So I guess this is like more of a personal introduction. It's really a cool story, but there's a gentleman named Peeyush Varshney that came from India and landed in Vancouver, and flash forward 30 years, from pretty much zero has built a $1 billion family office. And Peeyush is his son, and he's here with one of probably Canada's highest grade regional scale zinc opportunities. And we've been talking for a few years now, and we've become colleagues and friends first. And I'm just really excited. He had a fantastic hole that came out recently. A lot of money's chasing him right now. He's got to make some decisions. He was in Japan and he was in Hong Kong recently. But you're talking about probably one of the highest grade regional scalability zinc plays in Canada. So if you like the theme and narrative for zinc, I think this one, compared to peers, Peeyush, what are we trading? 60% below peers right now? Yeah, so once owned by the Lundin family, they may return, we'll see. But everybody, I just want you to meet Peeyush Varshney, and this is Canada Zinc Metals.
Thanks, Sean, for the introduction again. So yeah, I'm Peeyush Varshney, President and CEO of Canada Zinc Metals. First, I want to say thanks to Sean and Colin for putting on the conference. I think these guys, they're smart guys. They're young. They're up and comers. When I mention to people every now and then that I was going to the Palisades conference, everyone has good things to say about Colin and Sean. So thanks, and Susan, thanks for helping arrange it all. As Sean mentioned, our focus is zinc. And actually, at the outset, there's a company also listed called Canadian Zinc Corporation. We are not Canadian Zinc Corporation. We're Canada Zinc Metals. The other company is Northwest Territories. They're near a national park. They've got some metallurgy issues and whatnot. So we try to distinguish ourselves from them. Canada Zinc Metals, we're in British Columbia. And the reality is there's very few zinc juniors out there. There's a small handful. And of that small handful, I'd say most of them have projects that won't go anywhere. They're not going to be mines ultimately. They're out promoting, raising some money. You might make some money on a trade, but they're not projects that have what the majors are looking for. And there are more and more coming out of the woodwork, given the fact that the zinc prices run up, almost 100% over the last year and a half. So it is spawning a number of rehashes of projects that didn't work in the past. Poor jurisdictions, other projects are sort of coming to surface now. But again, there's a small handful, and again, I think we're amongst probably the top tier. So we have two main projects. One is the Akie property. That is where we've got a large defined resource. It's 43-101 compliant. It's almost 30 million tons of about 10% zinc lead. It's open for expansion as well. And along with the main deposit, we've got what we call the Kechika Regional project, which is the district scale opportunity in the same area. And so in terms of majors, which we'll get into, some of the ones that have invested in us and some of the ones I'm talking to right now, what we offer is the large scale deposit, the very good grade, the jurisdiction, British Columbia, so it's a good jurisdiction. More and more larger companies are wanting to stay away from some of the places where there's been appropriation of assets, changes in laws and whatnot. So we've got the scale, the grade, the district potential, and the jurisdiction. So just quickly, for those that aren't as familiar with zinc, I mean, it's obviously one of the base metals. It's the third most used non-ferrous metal in the world. And it's primarily a construction metal. I mean, anywhere that there's infrastructure that's being built, or automobiles, there's usually a coating of zinc on the steel to keep it from rusting. So it's basically rust-proofing the metal. And that's where about 65 to 70% of zinc is used. And of course, there's paints, fertilizers, vitamins. There's other uses as well, but infrastructure is the primary usage. And what we're seeing is there's an increasing demand for zinc. Developing nations that are building out infrastructure, and of course, Trump's sort of infrastructure rebuild initiatives as well. All that stuff is driving the demand for zinc. And on the supply side, what's happened is some of the largest zinc mines in the world in the last 2 years have in fact shut down. They're completely depleted of ore. So With some of the largest zinc mines coming off stream and this increase in demand that's happening, it's what's leading to sort of this fundamental chronic shortage in the supply of zinc, and obviously that's our opportunity. But some of the zinc mines that have shut down over the last couple of years are, Brunswick in Canada, there's, Century, a big one in Australia, Sheen in Ireland, Scorpion in Namibia. So almost 15% of the world's global zinc supply has come off in the last couple of years, and there's very little that's coming on to replace that supply. And hence the price of zinc, as we talked about, has moved up almost 100% over the last 18 months to almost $1.50 a pound, which is the highest in about 10 years. Again, on the opportunity, I won't get into it too much because I've spoken about it, but we're talking about enormous deficits in zinc. These are some, think tanks and analysts at RBC. You see some pricing here for the forecasts, $1.25 this year. Right now it's at almost $1.50. But you see it increasing over the next 5 years, right through 2020. And some of the mining groups that we're talking to, they all are across the board very bullish on the zinc space. These are just a couple of slides I've taken from tech. Again, basically you're seeing the structural deficit on the supply side growing right through to 2020. They put together a slide where they've got the primary sources of zinc, which include existing mines and new mines. It's got secondary sources of zinc, which are recycling primarily. Then on the demand side, you can see on the graph how you've got this increasing gap between demand and supply. And in their estimation, that's right through 2025. It's just an increasing imbalance in demand and supply on the zinc side. Sean said a little bit about myself, but yeah, I work in a family office in Vancouver with my brother and father. They're both chartered accountants. I'm a corporate lawyer by training. And in the office, I'm in charge of the resource side of the business. But I would say that 90% of my time is on Canada Zinc Metals. I think there's a huge opportunity here. We're undervalued. And given where zinc is at right now and where I think it's going, I think there's tremendous opportunity. So it really is my main focus. One of the companies we've been involved in from the very beginning was Mountain Province Diamonds. It's a joint venture with De Beers, but basically, we were part of the group that made the discovery. So the very initial drill hole that hit kimberlite brought De Beers into the fold, and I'm still on the board of that. But that's one where we constructed the mine last year at 1.2 billion, and so my brother, father, and I were up at the mine opening. But it's one that we've been involved in from the very beginning, first drill hole to construction of the mine, and now it's basically been in production for the last 6 or 7 months. Early days there. John Thomas, a director on the board, he's a PhD. Specialization is metallurgy. Marco Strub, portfolio manager based in Zurich. He's here, in fact, right here. Marco, you just may put up your hand. Yeah, he's on the board. Ken McDonald is our VP Exploration. Ken is a key guy in the company, very, very smart technically. He lives in Prince George, which is closer to the deposit. And not only being strong technically, Ken also used to work for the Ministry of Mines and Energy in British Columbia. So he's got a lot of experience in government. So his skill set in permitting these sorts of projects, I've seen him deal with government, getting us our surface drill permits, our underground exploration permits, our effluent permits. He's got that skill set as well. One of the things that he did before he joined us is he led the permitting team for the Mount Milligan project that Terrain Metals owned. And so Ken led the permitting team, got it fully permitted, shovel ready for construction of a mine, and then Thompson Creek Metals came out and bought Terrain Metals for about $650 million. So Ken certainly has the ability to move our project toward being shovel ready and construction of a mine. So Canada Zinc Metals, we are the dominant landholder in what's called the Kechika Trough, where there is several large base metal deposits. We own 100% of the properties. Teck and Korea Zinc happen to have a deposit 20 kilometers from where we are. We've currently got about 160 million shares out. Our cash is about $5 million. And we do about, 250,000 shares a day on average. You can see the chart there. Evidence of the quality of what we have here is in sort of the roster of shareholders we've been able to gather. We've got Tongling Nonferrous Metals, they're a state-owned enterprise out of China as our largest shareholder. They're primarily a copper player out of China. They've got exploration properties, they have copper mines, they have copper smelters. They've also got a zinc and lead smelter, and we're the only company that they've invested in the zinc and lead space. They're the same group that bought out a junior about 5 or 6 years ago called Corriente Resources. They paid $680 million to buy out, take over Corriente, which had undeveloped copper deposits in Ecuador. So we've been to Tongling City 3 or 4 times. We've been to Quito, Ecuador, visiting Tongling there, but they're our biggest shareholder. Jintrao is a Chinese investment group. I mean, it's just passive, but they saw Tongling invest, saw what Tongling has done in the past with Corriente, and wanted to become shareholders. So they own about 5%. And I should mention, Tongling's investment is passive. They have no rights to concentrate. They have no hooks in the deal. They have no offtake. They have no anti-dilution rights. It's just a passive shareholding. So we've tried to keep it that way, which keeps other groups approaching us as they're not concerned about Tongling's anti-dilution rights or anything like that because they don't exist. More recently, Teck and Korea Zinc have invested in the deal. Not a huge percentage, they're collectively about 1%, but a bigger thing for us was they've optioned some of the earlier stage claims we have in the belt. So that was the bigger attraction to us with having Teck and Korea Zinc on the roster. But again, evidence of quality. Lundin Mining, they were the first group to invest in the company. Neil O'Brien, their Senior Vice President of Business Development and Exploration, used to work with Teck. So they actually owned 9.9% of the company up until just last year. They'd been on the roster. And about a year ago, just over a year ago, it was March 2016. There was a lot of pressure in the market. I called up Neil. I wanted to confirm if Lundin still had its position, and he said, Peeyush, I'm pretty sure we do. Calls me back the next day and said somebody in their finance group, a junior fellow, had sold the position without talking to Paul Conabert or himself. And I know that fellow's no longer with the company, but Lundin would still be on the roster if it wasn't this fellow offing the position. But given some of our recent drill results, the reality is that Neil has called again, interested in this year's drilling program, and so there's a dialogue going again with Lundin Mining. Extrata Ventures, which I'll talk about shortly, was also interested in the project. Anyways, it really is just examples of quality, I think, evidence of quality. This is the claim map. So that is the asset. We've got the main deposit here, the Akie property, where again we've got the 30 million ton deposit open for expansion, very good grade. We own all of the pink here and the red. I mean, so it's a massive district scale exploration belt. It is 140 kilometers in stretch. It's almost 80,000 hectares. And the blue is Teck and Korea Zinc in a 50-50 joint venture. So the Cirque deposit, which is roughly 40 million tons of the same grade, is about 20 kilometers to our northwest. The geology, I mean, these are SEDEX deposits. Most of the largest zinc systems in the world are SEDEX style deposits. So this is a SEDEX belt. They're often found, I mean, we've heard the term pearls on a necklace or peas in a pod. So we're confident here that we have the necklace or the pod, and there's a series of these deposits along this entire trend. You've got the big deposit here at Akie. It's called Cardiac Creek. That's the deposit. You've got the Cirque deposit 20 kilometers away. Another 20 kilometers to the northwest, the Mount Alcock property. That's one where there's a historical drill hole of almost 9 meters of around 9.5% zinc lead. There's been no drilling there in 20 years, but certainly that grade is very similar to Cirque and Akie. So we do think there's a good chance of another deposit here. But the whole trend has mineralization showing. So, that's one of the things that's, I think, attracting these senior companies to us is sort of, again, it's not just a large-scale deposit established here with very good grade, but there's this district-scale potential. So, I mean, as Eric spoke of, that's where there's real upside, is the exploration, the chance of new discoveries. So we've got a bit of both, sort of the fallback main asset here, but the big exploration potential in the belt. Just me and Tongling visiting one of their smelters and whatnot. Teck, we've been able to bring these companies in at premiums to market. When Teck and Korea Zinc made an investment, we were bashed down to 20 cents. They put money in at 40 cents. Tongling came in at an 80% premium to market once, and then a 60% premium to market once. Even Gin12 came in at about a 25% premium to market. So we've been able to do that. The earn-in that I've talked about with Teck is they've optioned these three claims here, the Pi property, Cirque East, and Ewan North. So effectively the three earlier stage properties between the two deposits. So basically they had a $3.5 million expenditure to earn up to 51%. They spent $3 million to date, and $8.5 million would get them up to 70% in those three earlier stage claims. And as we know, Teck has a zinc and lead smelter in Trail, British Columbia, and they are one of the larger zinc miners in the world. Location infrastructure. So right now, I mean, there's the deposit right there. There's the belt. You can drive to the deposit all year round right now. So there's all season roads. You can access by driving vehicles there. They're big industry forestry roads. Those roads connect down at the town of Mackenzie, where existing rail goes to Trail, BC, where Teck has its zinc and lead smelter. The rail line also goes to Prince Rupert and Stewart, where they're sort of deep sea shipping ports where the Asian groups certainly see opportunities to ship the concentrate to their smelters in Asia. And then the largest hydropower plant in BC is on Williston Lake, just to our south, the WAC Bennett Dam. So you don't need to build roads, you don't need to build railroads. There's existing power in the area, and there's a tie-in here that goes up to the Kemess mine. So our options are definitely a tie-in directly to the power plant or a tie-in to the Kemess line. But really, the infrastructure is quite advanced, and again, that's, I think, attracting groups to us. The capex that we've estimated to put this into production is about $240 million US dollars. So we're not talking about billions of dollars and whatnot. We're talking about 240 million US. So the project itself, we've done 65,000 meters of drilling. It was about a year ago we put a new 43-101 report, and basically 71% of the resources indicated category, so high confidence. 29% is inferred. Ultimately, this is going to be an underground mining situation, so we've done most of the surface work to where the decline would commence. And we've got the underground permits in place for both surface drilling and underground exploration. And these are sort of some of the intercepts that we were hitting, which had Sumitomo Metals, Lundin, Boliden. Everyone was calling us some very good intercepts. And everything we do is true widths. There are companies out there now that report in interval length, not true widths. They'll report in zinc equivalent, not in zinc and lead like we do. And they'll report in feet sometimes instead of meters as we do. But anyways, these are all true widths, but you're getting grades that were 15 meters almost of 20% zinc lead. You're getting 26 meters true widths of 17% zinc lead. As Sean made a quick reference to about a week ago, 10 days ago, we put out a result from our recent drill program. It was the best hole we've ever hit, and it's not on this, but it was almost 60 meters of 12.5% zinc lead. It was almost 10% zinc, 2.5 lead. And that was 15 meters of 22% zinc lead. I mean, it was a massive hole. And that's what had some of these other larger groups starting to call us again. So there's the deposit. Basically, the red is the indicated category. The yellow is the inferred category. This is open for expansion along strike, and it's totally open at depth. And what we find is that the grades have been getting higher as we go deeper on the deposit. And so that is, the dimensions right now are 1.3 kilometers along strike, 800 meters dip, and on average 20 meters wide. As I mentioned, the whole of last week was 60 meters true width. It was just a massive intersection. And so it's an ideal underground mining situation. This is basically the deposit. It's this massive rectangle that's sitting in the hillside. It's 1.3 kilometers, as I mentioned, along strike, 800 meters dip, and on average 20 meters wide. So it's predictable, consistent, massive slab of mineralization. So as you come at it from the side of a hill, you've got this wall in front of you just mine. And it dips at 70 degrees, so it's sitting there like that. So it's an ideal underground mining situation. That's in your PowerPoint. It's obviously on its side right now, but basically, it's a cross-section of the hole I just referenced, the big hole of last week, A17137. So really, we've been drilling from surface on a hill, and we're coming down, going through this massive slab, as I've mentioned. So 137 came down a bit deeper here and hit this huge hole right through the zone. But you know, as I mentioned, we're quite excited about the expansion potential at depth because, again, the grades seem to be getting higher, and it's potentially getting wider and wider as we go deeper on this thing. There's the resource. You know, again, we've used a conservative 5% zinc cutoff. Again, there are a few companies out there that use a 2% zinc cutoff just to inflate their numbers and whatnot, but we're using a conservative 5% zinc cutoff, coming up with roughly 20 million tons of just under 10% zinc lead. It's primarily a zinc deposit, as you can see, at 8.2 zinc, 1.6 lead, and then there's the inferred category. Again, a majority of the deposit is indicated. A little arm waving, I mean, that equates to almost 5 billion pounds of zinc, almost 1 billion pounds of lead, 12 million ounces of silver. Obviously, you're not going to mine all of it, but I mean, that is an indication of how much metal's in the ground right now. And at today's prices, that's almost $10 billion Canadian. Our market cap is 50 million. I mean, we're really trading at a discount, not only, you know, in this measure, but relative to our peers, which I'll get into shortly. And I think that's the opportunity. It's high quality zinc. It's a district scale, trading cheap. So after the last hole, I mean, we don't have any formal coverage. We've never gone to the street. We've never done a brokered financing, really. So, you know, there's a lack of awareness, and I think that's part of the disconnect here in value. But after the last hole, the analyst at Echelon, Ryan Walker, put out a one-page sort of watch list thing on us. And in that, he included a peer valuation, a peer group valuation. And essentially, he's saying that CZX trades at an enterprise value per pound of zinc equivalent in the ground of less than a penny, so 0.94 cents per pound of zinc in the ground, compared with the peer group, and he's knocked off the highest and the lowest in this peer group. But compared to them, they're trading at 2.34 cents per pound of zinc in the ground. So we're trading at about a 42% of the value given to the peer group. That was with measured and indicated resources. If you look at measured, indicated, inferred, we're trading at 0.7 cent per pound in the ground, compared with the peer group at 1.71 cents per pound of zinc equivalent in the ground. So, you know, again, both these measures put us at about 42% the value given to the peer group. And I can tell you that, you know, these companies, they don't have seniors chasing them like we do. They don't have the size or the grade or jurisdiction or metallurgy. I mean, I really believe that we're one of the few that will ultimately be a project that's put into production and either by us or it'll be owned by an owner, owned by a senior player. Susan, if you just put the slides. I did put the next two slides in the presentation, but they're in a handout that I've given out to you, and you know, it's just a fact sheet. I'm really just, you know, using two examples of comparison here. So Tinka Resources is one of the companies that's getting a bit of press right now. You know, I think there's a few newsletter writers that are covering it, and you know, if you look at their project, I mean, they're roughly 18 million tons of inferred resource. Again, we're 19 million tons of indicated, higher confidence. Their grade is 5.9 zinc. You know, they got 0.2 lead. We're 8.2 zinc, 1.6 lead. We've got no NSRs. They do have an NSR. They're in Peru. I've talked about the way our deposit holds together. You know, theirs would be you know, 3 separate zones that are separate, but they come together to come up with that resource. It'll be an underground mine situation. They don't have their permit in hand. We have 80,000 hectares of exploration properties. They have 15,000. You know, their market cap is 130 million. We're 50. Again, just an example of, I think, you know, where we should be trading at. And the reality is, I think we should not only be trading at our average of the peer group, which would put us at 77. We're at 31 cents right now. That would put us at 77 cents. But I would actually argue we should be trading at a premium to the average given the peer group, given the quality of what we have here and the types of investors we've been attracting. The other one, I'm sure some of you guys are following the Arizona mining story. Again, here's one where they've got 100 million tons, so it's a big deposit in Arizona. Their grade is 4.4 zinc, 4.4 lead. Again, we're 30 million tons, so a third their size, with 8.2 zinc, so double their zinc, and 1.6 lead. Again, they're a series of sort of stacked lenses that go down a kilometer, so there's a lot of space between mineralization. They've got royalties on the deal. There'll be an underground situation as well. I think some difficult times permitting in Arizona, but their market cap's $1 billion, and we're 50. So again, and we've got these majors that have invested. I know Cisco, in fact, has sold their entire position in Arizona mining, so they do have South 32 as one of their strategics. So this slide, just quickly, I mean, this excites our geologists. What we see is sort of these repeat thrusts up the entire trend. So what that means is, our focus has been on this central thrust where we found the Cardiac Creek deposit on Akie. But really, the theory is that there's been these repeat thrusts of mineralization along the entire trend. So, the reality is there could be 3 of these mineralized bodies along this entire trend. So basically, Cirque and Mount Alcock, that is the western panel of mineralization. Cardiac Creek on Akie is the central panel, but they also believe there's an eastern panel of mineralization. So just at Akie alone, although there's this exploration potential in the belt, just at Akie, there are targets to the east and to the west. And there could be, in fact, 3 of these massive slabs parallel to each other. So there's huge exploration upside on Akie as well as in the belt, based on this theory of repeat thrusts. The Kechika Regional, again, that's all of this, leaving the main deposit aside. And the reality is, the other group that approached us was actually Xstrata Ventures. So a division of Xstrata approached us. They met them in London, met them in Toronto, met them in Vancouver, and they basically wanted to option this entire claim package of regional claims, leaving the main deposit aside because we didn't want to deal with that. So after all those meetings, they actually wound up giving us a proposal where they wanted to spend, I think it was up to $40 million exploring this belt. And by the time it was papered and documented, within a month, they merged with Glencore. And when that happened, the deal basically fell off the table. But it was another example of another major that was interested in the belt and the exploration upside. I mean, this is the type of situation that would keep a base metal mining group busy for like a century. I mean, it really is that large. Mount Alcock was that project to the northwest. Again, that historical drill hole of almost 9 meters of 9.5% zinc lead. This barite, kill zone where nothing grows, that excites geologists. They want to get up there and start drilling. So it is an area that we want to start drilling as well. As we really just focus primarily on the main deposit. So this past season, we had 2 drills on the property. We were able to drill 8 holes. We've announced half of the results. So over the next 6 months or so, the balance of the drill results will come out. 5 of the holes were also included to advance the metallurgy. So those results will come out towards the end of the year. We'll issue a new resource calculation on Cardiac Creek to include this year's drilling. And then we're looking at initiating a PEA, which should be done by the end of Q2 2018 is what we're anticipating. So over the next 6 months, some sort of milestone announcements coming out. And I do think there's going to be a re-rating of the stock. I mean, we're trading at such a discount to the peer group. And I think as we start getting out, and I'm going to have to start meeting brokerage firms and engaging brokerage firms to get involved. As I mentioned, we've really been raising money strategically and in non-brokered fashion. But it's really just a matter of awareness, and I do think, as I say, the stock will re-rate to a level that it should be trading at. In summary, so the Cardiac Creek is actually one of the largest undeveloped zinc deposits in the world, attracting investment from large base metal mining groups. I was actually in Tokyo and Hong Kong last week, and I can say that I'll talk about it because nothing's definitive at all, but Sumitomo Metals has since emailed me twice and now wants to meet in December based on our discussion. So it is attracting that kind of attention. We are the dominant landholder in the Kechika Trough. All these claims are in good standing until 2025. We'd have, if we don't want to do anything, they'd be in good standing. The infrastructure in the area is well established. One thing we're thinking of doing is actually considering a spin out of those regional claims because we're not getting any value in the market for them. So, what we do is if you're a shareholder of Canada Zinc Metals, if we spun out those regional claims, you get free shares of the spin out co and the upside again of the discovery potential in the belt. And then all of this is in this, this backdrop of this chronic shortage of zinc that's occurring, very little new big projects coming on stream, and the shutdown of some of the biggest mines in the world over the last couple of years. Yes, so that's the presentation. I guess I'll take some questions.
Cool. So we've seen a second leg here in the zinc bull market where we've jumped from about $1.20 above $1.50. I haven't seen much movement in the juniors at all. Do you have any feeling on why? Do you think the market thinks that this might be long in the tooth? And then a corollary there, what do you think the long-term price of zinc is, and what price will you probably be using your PE at?
Yeah, well, you know what? A few of the companies have moved, right? Obviously, Arizona Mining's gone up from 30 cents to 350 over the last 2 years. Tinka was flatlined at 20 cents until someone wrote about it, moved up to 60. But I agree, for the most part, they haven't really moved up. And the reality is they're not that high quality projects. As I said, you could probably make a trade on them and make a bit of money, but I just don't think that a lot of those things are going to go anywhere ultimately, right? I don't know the reasons why that the market isn't really picking up with the price of zinc going up. But I'm only going to go on the forecasts that I'm given by some of these bigger mining groups. With Teck, they're bullish right through to 2025. I know talking to the Lundin Group and whatnot, they're all bullish on zinc, right? I base my opinion on what some of these bigger groups are telling me, and the analysts.
Yeah, I'm curious about 2018 plans. You mentioned you wanted to, rejig the resource with the new drilling that you have and push towards the PEA. I think the sun is really shining on zinc, and I don't know how long that's going to happen for. We've always heard the story that, zinc's going to go, zinc's going to go, zinc's going to go for like a decade. Finally, zinc is gone, and it's happening. While the sun's shining, don't you want to unlock? I think it would be interesting to see you guys unlock a lot more potential on that district and test some of those other targets instead of advancing this from a production perspective. It seems like the deposit's already well understood and well known.
Yeah.
Wouldn't you want to step on the gas?
Yeah, that's a great question, and yeah, it's a good comment. Yeah, definitely. The false starts in zinc over the last several years, I think it's because there was this looming shortage. Now with the actual shutdown of those mines over the last 18 months, 2 years, you've seen what's happened, right? So I agree, there's been some false starts over a number of years, but I think now you're seeing what's really happened with these mines actually shut down. Our plan on the project after, sort of the news of the next 6 months, to drive this deposit forward now is to go underground. As I mentioned, it's an ideal underground mining situation. So, by next year, in the ideal world, we're actually going underground, moving this towards measured and indicated, and completing a feasibility study. But that can sometimes be a boring story. So what we have, fortunately, is this exploration potential in the belt. So really, it would be a two-pronged approach, and that would be, let's go underground, let's move this deposit, towards a production scenario. A lot of that underground exploration would be done at a level that would be used for future mining, right? For future haulage and whatnot. So it's almost pre-production, but you'd also have drilling in the belt for those new discoveries, right? So you've got news flow sort of from both aspects. So that's the ideal situation for next season, right? Right now it's surface drilling, so you're constrained from sort of May till October. So it's not like I can go drill it now, but when it's ultimately gone underground, you can work all year round, right? So you can, in fact, push it forward 12 months a year. Okay, thanks.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?